So in forex trading, currency are always traded in pairs. So that means you are buying one currency and selling another at the same time. So for example, we have Euro USD. So that means we have Euro and USD. So if you are buying Euro USD, so that means you are buying Euro and selling US dollar. So currency pair are traded in pairs. So, and you have to pair two currency pairs. You have to pair two currencies together for you to be able to trade in the forex market. If you are buying one, you are selling another one at the same time. So, and we have base and quote currency. So every currency pair has two parts. So the base currency is the first currency in a pair, while the second one is the quote currency. So if you check the Euro USD, you see that we have Euro, we have USD. In this case now, this USD is the Euro is the first one, which is the base, why the quote currency is the USD. So now they always use the quote price for every currency pair. They will use the quote price. What that actually means now is that, let's say the price of Euro USD is at 1.100. So that means that means 1 euro is equal to this at this price tag here, which is 1.1000. So for you to get 1 euro, you will need $1.1. That is just what it means. So for you to get 1 euro, you will need that quoted price, which is 1.1 US dollar. So, and let's also use Naira, for example. Now let me go on my chart to quickly use USD NGN, that is Naira. So you know I told you that they use the quoted price. So now in this case now the quote price, the base is the USD, while the quote is the Naira. So and if you check, you see that what we have here is the current market price here. We have 1.356. So that means for you to get $1, so that means $1 is equal to 1,356 Naira. And for you to get $1, you will need 1,356 Naira. So that is just how it was. So they always use the quoted price for every currency pair you have. So for you to get one base currency, you will need the price of the quote price to get one base currency. So that is how it was. And we have three type of currency pair. We have major currency, we have minor currency pair, and we have exotic currency pair. So let's go to the major pair. So major pairs are the most traded currency pair in the world. So an important thing you have to notice, you have to know about them is that they always include US dollar. The major pairs always include US dollar. So for example, we have Euro USD, we have GBP USD, we have USD JPY, we have USD CHF, we have AUD USD, we have USD Canadian dollar, New Zealand dollar, USD. So we have 7 major pairs. So those are the 7 major pairs that we have. So and why these 7 major pair, why are they the most traded pair in the world? So why traders love to trade them is that so they have high liquidity, they have smaller spread, they are the currency pair that have smaller spread compared to other minor or exotic pair, and they also have clean price action compared to some minor pairs. So they have clean price action. So that's the reason why they are most traded when it comes to trading. So, and we have minor pairs. So minor pair currency. pair that do not include US dollar. So those are also called cross pair. So you can call this minor pair, you can also call them cross pairs. So for example, we have Euro GBP, we have Euro JPY, we have GBP JPY, AUD JPY, and pound card, which is GBP Canadian dollar. So, but any pair that doesn't really include, so we have many minor pair. So any pair that doesn't really include USD, they are minor or cross pair. So let me just go on trading view again to show you some example. And if you check my watch list, the majority of my list here, from here we have our major pairs. Apart from gold and most of these crypto pairs. So now let's quickly check from here. So I will just clear this. So if you check here now, you see that we have many pairs here. But any pair that doesn't really have that doesn't include USD, they are minor pair. Take note of this place I select Forex. So any pair that doesn't really include USD, they are minor or cross pairs. So you see we have many pairs here. So, but I'm going to advise you as a beginner, just focus more on the major pair if you are just coming into trading. So it's very, very advisable. So let's go back. So let me go back to the major pair. So you can just write them down, and you can add, you don't even have to trade all these major pair. You can just add few to your watch list and be trading them. So, and for the minor pair, those are the one I just showed you now. That's any pair that doesn't really include US dollar. They are minor or cross pair. So now exotic pair. Exotic pairs include one major currency pair and one currency from a developing or smaller economy. So for example, now we have USD CRY, which is US dollar Turkish lira. We have USD ZAN, which is US dollar South African rand. And we have USD NG, which is US dollar / Nigerian naira. And most of these pairs, you can't really trade them. It's not really advisable for you to trade all these pairs. So look, for example, let's go back on USD NGN. You see that the price action there. So there's no way you can actually trade this particular pair. You can't trade this. So that's the reason why you should just try to ignore those exotic pair. Let's check the USD ZAR. I think that's USD ZAR. I think the price action for this one is still a little bit better than but the spread is going to be crazy. It's going to be crazy. It's going to be very, very wide. So it's not really advisable for you to trade those exotic pair. It's not really advisable at all. So they are very high spread. They are less liquidity, and they have bigger risk when you are trying to trade it, because if a pair doesn't really move well and it's have a wide spread, see, it doesn't really worth trading. So that is that about currency pair. So